Previously, I talked about MicroStrategy potentially qualifying for inclusion in the S&P 500. The lower bound market capitalization is now about 14.5 billion, and MicroStrategy is now almost 30 billion. If MicroStrategy does get included into an array of S&P 500 passive index funds, that will bring a new wave of consistent passive flows to MSTR. But I think there's potentially an even larger, more important feedback loop that's already taking place. It's Saylor's strategy of perpetually increasing MSTR's Bitcoin holdings per share. Bitcoin is the apex digital property, as he has explained. Would you buy a company who is trying to grow their seashells per share? Then why would you buy a company who is trying to grow their dollars per share? Saylor is actually trying to grow his Bitcoin holdings per share, the world's best form of property. Saylor obviously understands the game is accumulating more Bitcoin, the only immutably scarce asset, but he's effectively found a unique arbitrage opportunity to accelerate this. MSTR is consistently valued at a price greater than its book value, which is mostly its Bitcoin holdings. This is true of almost all public companies. Their price to book value ratio is above 1, indicating that the total market value of the company is greater than the sum of all of the individual assets that the company holds minus their liabilities on its balance sheet. Right now, the price to book value for the entire S&P 500 is almost 5, indicating that the market value of a typical company in the S&P 500 is 5 times higher than the book value. This is the arbitrage that Saylor is performing. Large public companies are valued higher than their actual book value. This is very reasonable when a company has high growth expectations or investors are buying equities at any price to save for the future when their currency is being debased. But that means you can dilute shareholders by issuing equity or convertible notes, and it can be accretive to shareholders if they are using Bitcoin per share as their metric for return. And it's logical to use Bitcoin per share as your metric, as it's the apex digital property. Over the long run, it will likely outperform the dollar and all other fiat money, which is designed to debase against basic consumer goods. As a capital allocator, your objective should be to accumulate more Bitcoin, not more seashells, dollars, salt, or glass beads. This strategy may even work in a bear market. If MSTR stops trading at a premium to its Bitcoin holdings, then MSTR can borrow money and buy back underpriced shares that are trading at a discount to the Bitcoin they hold. This strategy may work in both directions. It's actually pretty genius. This could potentially open up a new wave of adoption. Either nobody copies Saylor and MicroStrategy relentlessly continues accumulating Bitcoin and drastically outperforms all of its competition, or the S&P 500 catches on and begins performing the same strategy. So who will be next? Which public company will adopt a Bitcoin strategy and upgrade their benchmark to Bitcoin?